Good morning, guys. I hope you go good. Wow. Good morning, guys. I hope you're doing well. That didn't start that well. Uh, I hope you guys doing well. It's 9:30 a.m. in London, and my name is Alejandro Zambrano, the Chief Market Strategist of ATFX. And we're gonna cover the markets as we usually do at this time of the day. Now for you it's maybe 9:30, but I'm actually in Hong Kong, and I'm here with the ATFX team over here, meeting up with different analysts and learning from each other's experiences. And we're gonna start to introduce some interesting things for you over the next few months. So very, very productive, but we'll talk more about that when I have more info to you about it. So let's take a look who's with us today. We have Maurizio. Good morning to you, sir. I hope things are good with you. And we have Vincenzo as well. Who else do we have here? We have Mrs. Ahid and Vince Chan. Hope I pronounced that correctly. We have Vasilios, Taufik, Mr. Rich Bell. I hope you're doing good. And Marvin, Keith Jones, and Don Holm. Those are just in the chat. Guys, thanks so much for joining me. If you guys have any question, don't forget you can always just pop them in the chat box there. So let's take a look at the markets. But before we do that, as always, I need to stress, as it says down here, financial markets trading, unfortunately, is high risk. Some 71% of retail traders trading with ATFX lose money. So it's not easy to do. Please bear that in mind. Of course, my job here is to try to help you as much as possible to support you in your trading. But please note that at the end of the day, we're all responsible for our own trading accounts. And just a little tip here, if you want to do this for the long run, just keep your money management in check. Of course, if you have a system that doesn't even show profit if you back test it, then obviously you're never going to make money. But if you have a system, like me, for example, I have a system that is profitable, then at the end of the day, it's about money management. So when the system has problems and markets are not trending, like in my case, don't lose too much. So you have chips, so you have money left really to take advantage of the markets when they start trending again. So let's begin. We're going to begin with the euro, and the market has actually moved up a bit here, as you can see. And the reason for that is that yesterday evening, the Federal Reserve announced that starting from May, they're going to reduce the pace of their quantitative tightening program. You might remember quantitative easing. Well, quantitative tightening is the opposite. Quantitative easing means you pump money into the system, you artificially try to lower interest rates to make mortgages and loans cheaper. Now they're removing liquidity, which has been lifting interest rates over the last couple of months. And what they're doing now is that the whole told us that we're going to see less of that tightening. And I think it's going to stop eventually when the portfolio of assets amounts to 17% of the US GDP. Okay, so you see it as less aggressive rate hikes, less restrictive monetary easing. Maybe even see it as a rate cut, which obviously is not, but still. And as well, they don't anticipate any rate hikes for 2019, but they do anticipate to raise interest rates maybe next year by 25 basis points. This, of course, depends on today's data. Now, if during the next few months we see some crazy non-farm payrolls numbers like 225 and then 225 and then 225 and wage growth is just very, very strong, then the Federal Reserve can change. But what the Federal Reserve are telling us that they don't anticipate that to happen. They anticipate the economy to sort of doing what it's doing now. So non-farm payrolls maybe 150, wage growth where it pretty much is, unemployment rate where it pretty much is. That's really what they're anticipating. And that's really the plan for now. Now, what happened here is that the euro dollar lifted upwards, and you might think that you have an opportunity to trade, but you don't have an opportunity to trade here because technically we're still trading sideways. And it's even more clear when you look at the dollar index. Dollar index is definitely trading sideways here since October 22nd. And until we start to trade below 94.99 or take out 97.71, then we are dealing with a sideways market. And it's the same thing here for the euro versus the USD. Okay, so I wouldn't get too excited here, but there are opportunities in other markets. And in today's update, I did an article a few hours ago. If you go to atfx.com/UK/EN for English, then you can go down here. We have the technical analysis section. And here I posted an update which with the title, Dovish FOMC might send New Zealand dollar versus the USD higher. Talk a little bit about the FOMC meeting. And here I put a little chart on that. I'll send you the link so you can check it out after we finish this presentation. You'll see it in the chat. It should be with you right about now. And if you're watching this as a recording, then you can always just go to ATFX homepage. As for the GBP versus the USD, it doesn't look that it's gonna be. It doesn't look like it's getting easier for Theresa May and getting a deal here, and that's why we've seen the GBP versus the USD trade lower. Today's the 21st, but by Friday next week, if there isn't any sort of agreement between the UK and EU by then, it will be the last business day of the month, and we'll be crashing out of the UK. And if that happens, the general view is that GBPUSD could probably go to 26.40, if not, Treasury Pound should be lower. The most likely scenario, though, is that they come up with some sort of agreement that says business as usual until X date, or business as usual going forward until they figure things out. So no Brexit at all. No one knows what's going to happen. Technically, if you want to trade this, if you believe, for example, that there will be sort of an extension and then some lighter form of Brexit deal, then you maybe want to be looking to buy at 130 with stop loss at 129.52. The alternative would be just to wait for that breakout. If you happen to be very, very bearish, then this, from a technical point of view, does not offer that, but maybe a break to 29.52 could be it. Now, I would not touch this at all. It's going to be very, very difficult to trade, and you can have some news over the weekend that can easily influence your trade. So trust me on this one. You might feel encouraged. You may really want to trade this, but it's probably going to be non-performing just because of the volatility. But if you insist, then again, dealing with a bullish trend, people might buy here, stop slow. Alternatively, that breakout because it looks a bit like a head and shoulders. Alternatively, having to be bearish and want to sell on the break. Alternatively, selling here with stops on the other side. But again, very high risk of gapping. I would not try to trade this. Here's your GBP versus the USD. On the back of the FOMC meeting, the market has now slid to the downside. It did trade below the March 7th low, March 8th, March 7th lows, and that causes me now to be neutral. This market may easily, of course, maybe bounce back, but I suspect the way this is looking that we could potentially trade a little bit lower, maybe go down to 109, and then we'll see. If we look at this from a big picture perspective, if we load something like a weekly chart, then you can see here that we're stuck within some sort of a triangle, some sort of a range, not too much different really from gold prices. And if this is a major high, then maybe we're going to go down to 108, and then we'll see what happens as we start to touch this upward trending, upward sloping trend line. Here is gold, by the way. So this is gold, and this is a weekly chart. and you can see how it looks a bit different, but it is definitely sort of limited by these highs, supported by this rising uptrend. And while we are at it, let's actually take a look. So because of the situation with the dollar, gold prices are deep now into the sell zone. Took fib from here to here when the market was trading here on March 3rd or so, and got the first sort of touch to the sell zone on the 13th, and now second, or actually third time. Now, this giving the macro fundamentals, is not something I would trade today. If one is already short, it's nothing to do except just waiting. And if the market trades on the other side of things here, we would lose out, and then probably go up a bit and then down. As for crude oil prices, they continue to trade upwards. We talked about the breakout here, March 13th. The market moved up, and the difference between low point and high point is $2.96. Difference between this level here and this level here is 2.96. So that's your first target. And then if you look at it from a big picture perspective, you have yourself a head, left, right shoulder with a target of 68.72. I don't think we're going to go all the way up there, but definitely up to maybe 60.89, and then maybe follow up a retest of this low here, which is the June low of 2018. If one wants to trade this, now we have the targets. We sort of have an idea as well. So where's the trend, right? Trend defining level. Well, I would claim that the trend defining level is at 56.95, which is here, and then obviously pullbacks to 58.82. 57.91 will probably be met by buyers as we sort of test the breakout point here, and then probably down and then upward again. Stock markets, S&P 500 is at the, not that far away, it's actually at the prior sort of 2019 high. It's testing that, then might go down a little bit lower, but as I said yesterday, these levels and 2,800 is really what I think people are going to be buying. Stop loss is 27.80. For now, risk reward ratio on this is 2.87, as you can see here. As for the German DAX, under strong pressure, and I was actually, I have not received a sell. Let me see, actually, this actually market just traded lower here at 8 a.m. I'm actually long this myself, but I didn't receive any message from my broker that I've been stopped out. I'm gonna double check this manually now. I can tell you this, the market from a daily time frame are clearly in the head and shoulders, like head, left, right. We talked about buying down here, and I've been reducing the trend defining level, as you know. And the trend defining level and the stops just below this level here, which is the March 14th low. Now this chart is shows the mid price from a CFD, so it's not the futures, which is what I'm trading. So it's the midpoint. My stop losses are just slightly below here, and it looks like I'm still long this market. And we're looking at this, we're still above, but obviously not looking too good. But let's stick with this until proven otherwise, sort of that we've been stopped out. What's also interesting here is that we're dealing with sluggish markets. That's what we're dealing with. We just have a few days of bullish uptrend and then that strong collapse. However, just because you trade below my trend defining level at 11,537 doesn't mean that this trend is going to go turn bearish now. To really turn bearish, to really start selling, we need to trade below the swing low, which is 11,410. And then the market will go here, most likely. The reason for putting the stop loss here is that I'm keeping this position at a very tight leash. That's just it. I don't want to give it too much leeway. Initially, when I bought here, I was risking 1.5% with stop loss here. I think it was 1.5%. Market moved to my advantage. I bought a bit more. Actually, I bought here, I think it was, and then bought more here. So bought here, stop loss here, 1.5%. Bought a bit more up here. and then reduce the stop loss. Most trades, if they're gonna work out, they work out really, really quickly. They don't mess about as this one is doing here. And I think that's pretty much it. I think we covered all the main markets we covered here at the market update for ATFX. Of course, guys, if you have any question, just let me know. I'm also very happy to see here there's more people than usual, and I'm really happy about that. Good to see. And thank you everybody that has been helping to spread the word. This is something I need help with, really. If you like the presentation, do follow me on Twitter and do share any tweets about the webinars, because obviously we wanna invest our time in ideas and services that people like, and the more people come to these webinars, that sends me signal that I should continue to update and do these updates. Okay, do you guys have any questions? If you don't, then that's fine. We're gonna wrap things up. Okay, guys, thanks so much for watching. I'll be back tomorrow as usual and provide you guys with a market update. I'll be also back in London on Monday. Don't forget to check out the technical analysis section. I'm not posting too much, but I'm still posting as well. I shared some things on Twitter. I did an update for baby pips, which I shared about 9 hours ago. So you can check that out. And as well, I obviously shared the update to the New Zealand dollar market update. Okay, guys, I want to thank so much for watching, and I'll see you guys same time tomorrow. Bye-bye.